All right, thanks for joining me. My name is Julian Sebastian. I have a Juris Doctorate and am the author of the Cycle Code. Today we're going to make a presentation on the 1.793% price cycle of the S&P 500 on the hourly chart. Every market has a cycle code. It's a mathematical spiral that regulates its cycles. When you know a market's true cycle code, you have that market's number. You know when it'll make its highs, and you'll know when it makes its lows on any time fractal or time chart. With the cycle code, you can profit spectacularly with options. We go through 16 cycles over a 3-year period in this presentation. And we'll show you this amazing cycle and its ability to resonate with the tops, swing tops and swing bottoms of these cycles. But, you know, just a 10% movement in the S&P 500 will translate into a 450% return on the options market. So options are an absolute amazing way to explode your profits trading the cycle code. More about that later. All right, in this presentation, I'll take the 1.793% price cycle of the S&P 500 on the hourly chart, and I'll show through 3 years of hourly data how that 1.793% cycle code has resonated with the price peaks at both swing tops and bottoms. Okay, we're going to take a look kind of at the bird's eye view of this 3-year period. This again is the S&P 500 hourly chart. You'll notice at the top of every major swing, at the top and the bottom of every major low, there is a green 5 or a green 9, or at the bottom a red 9 or a red 5. These are the endpoints of the cycles. They always end on either 5 vectors or 9 vectors. And we're going to get into, in this presentation, exactly how to construct these cycles, exactly how to construct these vectors. They're not based on guessing or intuition or any other factors but math. They are 1.793% movements from the last swing, high or low. When price moves 1.793% off its most recent high, that creates a vector, that defines a vector. It can go on to be quite much longer or larger movement than 1.793%, but it has to be at least 1.793% to qualify as a vector, either from a swing high or swing low. We'll get into that more later, but all of the constructions of all of the vectors and all of the cycles are based on math. I'm going to show you the trading rules for how to trade the 1.793% cycles competently, and we'll get into the money management rules for safe trading. All right, we're going to take one of those cycles and blow them up. You can see in this cycle, that's just one of the 16 that we saw in the bird's eye view. But you can see the 9 vectors, the 9 lines in red coming down. It's 5 waves, 9 vectors oscillating up and down. Then you can see it made a bottom and then reverse course and went up 9 vectors, or 5 waves. Now this is one of the larger ones. It's not the largest by any means, but it's a 10.3% movement in the S&P 500. But this is a 450% movement on the spider options. So 50 times you'd be making on the spider options than you would have just trading the S&P 500 or just trading the SPY. The SPY, by the way, is an index that trades at 1/10 of the S&P 500. It's highly liquid, and it's a great way to trade both the S&P 500 and the S&P 500 options. All right, to join us on the presentation, which is coming on the screen, should be an ability for you to subscribe, enter your email and your name, and I'll see you there.